Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Over the course of the last few weeks is the fact that the dollar index, which measures the greenback strength against a basket of 6 major currencies, has held relatively bullish, or more to the fact, since May, and as the market posts high highs and high lows in this up channel here, that's just broken above this top side here, the call was towards 95.35.55. Well, as you can see, we've hit a high of 95.53, and therefore, although the market may progress further, I'm actually taking a step back and reevaluate the actual assessment of how or where we can go next. Although the ADX is trending to a bullish case, we are overbought, but the MACD is still bullish as well. So we could even see a rise up to the 96 region. However, you can see here that any pullback is quite deep. It's around 93.50-60 area. This, on the flip side, views the euro. The call was at 113.50, well, the low has been now 113.59. So in terms of this downward pattern, we've reached this objective. So with the US dollar reaching this objective in the short term, and also the euro, I'd rather sit out now and square up and reevaluate the outlook, because you can see here that even the euro is oversold to a point that could see a rebound. I'm more in a position to see if the market can retrace back to 115. That would see the US dollar index pull back to the region that's seeable around, as I say, 94 or just below. The Australian dollar was a little bit mixed after earlier today. RBA Governor Phil Lowe was more dovish as he came out and said that he doesn't expect to see any rate hikes in 2022. The Australian dollar has backed away from this 60-day moving average and also around that 73.55 level, even though we did get to a high of 67. I would like to see where the New York closes tomorrow morning. If it is under 73.55, then I expect to see a further bearish case back towards 72.70, or at least around that bottom where we just recently seen. However, a close over 73.55 will give further upside potential to 73.95 to around 74.30.40. It's a little bit of a flip of a coin, really, I guess, because the RSI hasn't quite broken the midway point and the MACD is negative. So really right in the middle of the range. So we have to watch it very closely. The dollar yen has picked up a little bit more of a upstep to the bullish sentiment and looks back towards that 114.50-70 resistance or cap after one challenge there and many hesitation. But nevertheless, we're not backing away, and the RSI is holding to a somewhat positive sentiment. Let's see if the market stages another challenge and rejects. If so, then we are looking back to the bottom of the range around 113.20 to about 112.65. Looking at the pound, it's still a little bit weak, even though the market has rejected that bottom side around 133. The technicals, though, are still negative. So therefore, I still hold the call down towards that broader picture of around 132.80, but still a little bit cautious, because if we do see a snap to the upside, we can rally back to 136. So keep an eye on the RSI. The break for the midway point would give a further bias to the upside. CAD yen back to the top side of the range around 91.40, but still not overly strong. But the RSI has posted a positive pattern here after breaking through the midway point. I'm still going to feel the market will continue to trade in the range of 90.30 to 91.43 and reassess. The top side rally is still holding under that 1,870 for gold, and still with a bull trap anticipated above around 1,880 or somewhere around this region that was previously challenged and rejected. So I'm a little bit cautious. I'm not aboard these levels, and I feel the market may actually stage a short-term correction back towards the support or the breakout run that we saw from 1,835. Wrapping up with oil, the market did take the challenge down to 78.70. A little bit lower though, but posted a bearish dragonfly. The market is attempting to restore and look into that top side, but technically we can still see all the risk back towards that bottom side, but we need to see the break of 78.70 to support this bearish outside range candle. If not, then we may see another top side rally, but at the moment I'm still holding my bear view back towards this base and see if we can break through it. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the day.